Hello, everybody. Brian Shannon here from alphatrends.net. It is Friday, the 15th of April, 2016. Hope you had a good week of trading. The markets were positive this week, so pretty much green across the board, except for bonds lost a slight bit of ground here. But, the markets are behaving well. Year to date, we're up 1.92% in the S&P. The Nasdaq's down slightly. Russell 2000 pretty much break even. Biotech still struggle. They gave back a little bit of ground this week, but are definitely improving. So let's take a look at the charts and see the action. The S&P 500, we came into the market this week with a little bit of caution as we had broken a little bit of support here last week, and it was looking like we might get stuck underneath a 5-day moving average. But what instead happened, of course, was we saw the recovery. It got back above that 5-day moving average, made higher highs and higher lows, and here we see once again that from a failed move came a fast move higher. And that's kind of been the hallmark of this rally, is that we get these little shakeouts right before the rallies come. And we've seen this repeated over and over again. The path of least resistance on the daily time frame is still higher. We came into the week thinking that, a little bit of caution intermediate term, but not looking for anything to fall apart here. The buyers remain in control of the longer term trend. We've discussed this trend line numerous times, and seems as though it's still headed for that level. Next week, of course, we're going to have a lot more earnings reports, and that will continue to pick up for the next 3 or 4 weeks. So always, whatever company it is that you're personally trading, always be aware of when the earnings dates are due out, so you're not surprised by something and positioned incorrectly. For the most part, for near-term traders, it's pretty much gambling buying in front of a earnings report. If it's something you've held for a while as an investor, well, that's a different story, and you've got different risk parameters. So for next week, what we're going to be looking for is really for this area to be holding as support, really down to about 206 and a quarter to 206.75, let's say. So I could actually, I guess, tighten that up a little bit, but this is basically what we're going to want to see hold for support next week. If we hold that, then we continue to give the benefit of the doubt to the buyers. The path of least resistance is higher, and I will once again point out, as we often see, look at the volume and how the volume has diminished on the way up in this market. And a lot of people will tell you, yeah, the market's up, but it's up on light volume. Only price pays. You can't bring volume to the bank. Try to deposit your volume. You cannot do it. So more important than volume. Yes, we want to be aware of volume, but look at the trend. The market has been higher on lighter volume here, and that's the way it is a lot of times for the market. For the individual equities, it's often a lot different, and the volume tends to be more important, and it is an important consideration, but not as important as price action. Price is the only thing that pays. The Nasdaq also made it to new highs for the year here this week, and you can see these arrows that I've put in earlier pointing to subscribers where those failed breakdowns came. That from these failed moves lower, we'd see little shakeouts before a quick move higher, and that's where we are right now. So in the Nasdaq, I think that basically the key level we want to see hold as support next week would be really around really around 110, maybe down to 109, 75. Last week we came into the market thinking below 108.50. If it was to stay below that for more than a half hour or so, that we would become more bearish. The market got back up there quickly and recovered. So once again, from failed moves come fast move. From failed moves came a fast move higher, and we got above the 110 level, which we identified as saying we would be more bullish if it got back above that level. Let's talk about oil for a moment. Oil we had seen this broken down trend from late last summer, and last week we had seen that it pulled back down towards this prior level of resistance near 34.35, and that was also where we'd seen this broken trend line, and we were looking for a retest of the 42 to 43 level. Well, we've got that, and it seems as though oil is likely to be not as volatile, I think. It looks like it's most likely to maybe consolidate a little bit in here. It's going to need to do some work before it can really make another push higher. That is that, we're going to need to get back above that 43 to 43 and a half. And just based on the prior amount of time we've spent in that area, it doesn't look likely in the near term. So I would expect maybe a little bit of defensiveness in oil next week. The Russell 2000 made it up to this line here, which was got it positive for the year in the Russell 2000. Now, on a closing basis, we're still down 13 basis points in the Russell 2000, but we had seen really the first time all year that the Russell 2000 has gone positive on an intraday basis. So the entire year, the Russell 2000 has been negative up until Thursday midday. So pretty impressive recovery. We were looking at the trend line in here, saying this represented the essence of trend, and it looked like as long as we continue to hold above that, any pullback would be contained. For next week, it appears to me as though the key level would be number one, about 118, and then down, I'm sorry, 111.80, and then down near pretty much near 111. So those are our key levels for next week. We've got rising 5-day moving average, so we look at the market as innocent until proven guilty, meaning if you're going to short, you should only do so on an intraday basis while the 5-day moving average is rising, because pullbacks above a rising 5-day moving average tend to be just that, pullbacks, not something structural that's broken. The semiconductors have been a real mess. This group did survive above this key level of support that we wanted to see hold, so that's good. But the bad news, I guess, is that we've seen a lot of misdirection in this market. And, so for instance, with this gap higher and then this quick sell-off, another gap up with a quick sell-off. So I think that semiconductors are probably pretty much in a void in here right now. It's just a little too choppy in here. But again, the primary trend remains higher, so we don't want to short it. And it's too volatile to get long, so that's why I think that it's more of an avoid than anything. Biotechs, as we've mentioned, this group, we've got that trend line up above that is still a possibility here at some point in the coming months, I think. And this group is acting constructively. By that I mean, look at where we pulled back to this prior resistance. We've pulled back and found support there. If we look at the year-to-date volume-weighted average price, we see that that was exactly at that level as well. That's the purple line that I just drew in right there. So the year-to-date volume-weighted average price came together with prior resistance and held as support. So when we look at a 30-minute chart, you can see that pullback. And now I think that next week, it looks to me like if we can make a higher high above a flat to rising 5-day moving average, that back above this high from this week, that we ought to see the next leg higher for the biotechs. Again, keep in mind that there will be likely levels where resistance may become encountered, but as we've seen with all the other markets, these prior levels of support have not been offering resistance. I would say that your bias in the intermediate term to several weeks in the biotechs remains bullish. Apple, we had noted in here that Apple was continuing to behave well, that we were going to give the benefit of the doubt to the buyers as long as it remained above that 108 level. It pulled back deeply today. I had suggested to subscribers that this might be the better place for a stop here this week. So it's still in a longer term primary uptrend, but still struggles with that declining 200-day moving average. So I think Apple's becoming a little bit more neutral here. We spoke about the financials last week, saying that it was likely to find support down near this prior resistance and support level. I certainly did not expect it to rally the way it did, and I was calling it as guilty till proven innocent while it was below a declining 5-day moving average. As the 5-day moving average flattened out and it made a higher high, though, it became clear the buyers were getting back involved and they took back control of the market here. So financials, I think that they were coming into this past week, they were an area for concern. That concern has been abated due to earnings this week. So financials are no longer what I consider to be a threat to a larger breakdown in this market. Facebook did dip below that 50-day moving average as we were looking for. We thought that it would flush below the 50-day moving average. It's still got a declining 5-day moving average, and it's had some news that's making it pretty volatile here. So I don't see any advantage to getting involved in this. It's still showing over the last several weeks a pattern of lower highs and lower lows, and it's trying maybe to stabilize in here, but I don't see any advantage to getting involved. We spoke about Netflix and the potential for resistance at the conjunction of these moving averages, and that I was defensive about this stock. But again, as it gets as the story changes with new pricing information. As it gets back above that 5-day moving average, then again, this is why we don't sell short. As I said last week, just because we're finding resistance here, that does not mean sell short, because the trend is still higher. So Netflix made it beyond that level and continues to move higher. NetEase is one I discussed as looking bearish. I still think it does, and it's a volatile stock. I mean, looking at this now, I looked at it and said it's volatile. I mean, it's bearish looking, but I've looked at this action. It's certainly too volatile for me to trade. It doesn't fit my criteria of what I look for. It still looks bearish, but I'm kind of off that one. THC we thought looked positive. Good week in there. Don't let gains, if you have them in a stock like this, turn into a loss. Tempur-Pedic still looks bearish. Most likely has to break below this level. So maybe a little bit more neutral until it breaks down below there. Some stocks that we were looking at in Alpha Trends this week. PayPal has got a significant short position in here. The shorts have been coming out of it a little bit recently, but if you look at the volume weighted average price since the company came public, we're well above that. So the average short is clearly losing money. We've seen resistance turning to support near that rising 50-day moving average in here as well. And for next week, I think this is a good one to have on your watch for a move back above this level in here. If it can get back above 39.12ish, then I think that your risk is probably about $1, and it could be a potential nice runner here with that short position. You got to figure that they're not feeling too comfortable in there. We had some great trades in Alpha Trends this week. You ought to take a trial of. We had Cody, as I call it, the commander here. We bought this one prior to the breakout over here on this day at 29.06. We bought Diamond Offshore in here, and we're stopped out over there. Garmin was a nice one for us. We got involved in Garmin 3 days ago, and right in here before the gap up, we bought it intraday, sold half of it up on this level and got stopped out of the balance there. Monster was a nice short for us this week, and Wubba was a good one here. So Wubba Dubba Do for this one. We got involved right at this point, sold half of it up in here, and got stopped out of the balance at this level today. They're not all winners. They never are. Anyone who tells you that all they have is winners, move on. Don't listen to them. But come take a look and see if it's right for you. Thanks for listening.